So guys, I will be analyzing some pairs. I'll be analyzing five pairs: AUD-CHF, AUD-JPY, GBP-AUD, AUD-USD, gold, and CAD JPY. So six pairs, and I'll be starting with AUD-CHF. So you know how I do my thing. I analyze on higher time frames from monthly to daily, and I enter on 4-hour time frame. So here on the monthly, we can see that the overall direction of the market is downtrend since 2007. This market have been trending downward, so we are in overall downtrend. So you already know how I mark my zones. So these red lines are the monthly zones, while the blue ones are the weekly zones. So this is my monthly zone, weekly zone, monthly zone. So my overall target is from monthly zone to monthly zone. So I'm expecting this market to come down to this point. And remember, the market move up and down, so impulse and correction. So you can't expect the market to move in a straight line and hit your TP. No, that's not possible. The market will always move, create a correction, move down again, create another correction, move down again, create another correction. So starting here on the monthly time frame, we can see clearly higher highs and higher lows, though you can't see them clearly on monthly time frame, but I can see them clearly on monthly time frame. We have this higher high, we are making series of lower lows and lower highs. We have this lower high, lower low, we made a lower high, lower low, lower high, lower low, lower high, lower low. Now remember, after a lower low, we need another lower high before pushing down. But on the daily time frame, I'm seeing entries. So that's why you need to start from a higher time frame to analyze. So in this case, okay. So on the monthly time frame, what I do on the monthly time frame is that I check candlestick formation, like candlestick patterns. So here on the monthly, nothing is stopping the market from moving down. The only thing stopping this market now is this, from this lower high to this lower low, we need another move to the upside. So from the monthly candlestick pattern now, we can see this candle close bearish, and we can also see this candle close bullish. So this formation now is like indecision, so you can't really know what will happen from here, from the candlestick pattern. So I'll just go down to my weekly time frame. So this is my weekly time frame, and this is where you see this. On the weekly time frame is where you see the lower lows and lower highs properly. So you can see them. You made lower high from here, we made a lower low, lower high, lower low, lower high, lower low, lower high, and we made another lower low, and we need another lower high. You see, but on the daily time frame, I'm just seeing entry, I'm seeing selling opportunities, not knowing that the selling opportunity I'm seeing on the daily is premature. Like the trade is a premature trade, because we need to put a new lower high before pushing down to this zone again. So how do I know when to get into the market? I use my Fibonacci, because that's what I use to measure impulses and corrections. So in this case, my students, you already know what I'm talking about. So if I put my Fibonacci from the high down to the low, now you see my 50% retracement. This is the golden ratio, the sell zone and the buy zone. So this is on the weekly. You already know the weekly time frame is blue color. Now from my weekly time frame, I'm expecting this market to come to this blue zone from the weekly aspect before selling to the downside. But on daily, this one move now, we are seeing it as impulse and correction to the downside. But the higher time frames, we need deeper corrections before selling to the downside. So you see that though I entered this trade, I sold this trade here. and I hit stop loss. And the reason why I hit my stop loss is because I did not do proper analysis. Like I did not do proper top down analysis, because if I did proper top down analysis, I would know that this market here is trying to retrace to this zone before giving me a sell. So the mistake I made was trying to sell here, because I saw an entry, trying to sell here and take my profit and take my TP1 and TP2, not knowing that we need the deeper corrections to validate this weekly impulse and correction. So for now, the overall direction remains bearish but short term bullish. The overall direction remains bearish but short term bullish. So what I'm going to do is now I'll go down to my daily time frame. Though on the weekly, I love spotting chart patterns on the weekly, but there's no chart pattern here. The only chart pattern I'm seeing is just this impulse correction, then we come here, we move down and come to this zone. So now you can day trade with this strategy. You can day trade, you can scalp. Anything you are seeing on higher time frame, you can also see them on lower time frame, but I hate trading on lower time frames. I hate it. So that's why I trade on higher time frames. So if I go down to my daily time frame now, I'll show you guys, because on the daily time frame is where I do my proper analysis. I check my direction from monthly and weekly. Then on the daily, I do my proper analysis, draw my trend lines, validate everything. And so I remember what validates our 50% Fibonacci level and the 0.618 is if the structure is lining up with previous support or resistance. So the 50% retracement now, this zone, this line, this zone here is lining up with previous support, which is a very strong support, which was broken and is now resistance. So we now have more confidence that this is a support level, and the market getting a double bottom from here, pushed up, break below it, and we also need a test of this zone. So short term, this market is moving up to maybe probably come to this zone. That's where we'll start looking for selling opportunity. So this is how to avoid premature trades, because here I was in here and I'm very happy because my trade was around 60 pips profit. I was happy, but when I saw the market reversing, I was like, something must be wrong. So that's why I did proper analysis and found out that we need more push up on the weekly time frame before they sell off to the downside. So let me go to my daily time frame and do my proper analysis. So this is my daily time frame. And you can see the impulses and corrections. So the impulse we measured on the weekly is from this high to this low, right, if I'm not mistaken. Now this is what I did on my daily time frame. Like, this is what deceived me and that made me sell this market from here. I was just checking, like I used this, try to understand, I used this zone as my lower high, and I draw my Fibonacci from this zone to this zone, thinking that the market is around the 50% adjustment level, but don't know that this is not a valid Fibonacci area. The valid Fibonacci area is from this zone, because we will have impulse correction. So here the impulse we have, this is our correction before this impulse. This is also a correction, but since we did not break below the previous level, is not an impulse. So our Fibonacci should be drawn from this high to this low. The Fibonacci is just identify your higher highs and higher lows and draw a Fibonacci from the higher high to higher low, from higher low to higher high, and you have your zones. It's as simple as ABC. So in this case, if I'm coming on daily now to draw my Fibonacci retracement, I will draw from this high down to this low. You can see that I still have that my monthly zone for the market to come and test this zone before giving me a selling opportunity. Now another thing is that since we are in a bearish trend, the market might not get to this zone. Remember, like, you can't expect the market to respect your analysis 100%. So the market might not get to this zone before pushing downward, since we are in a bearish trend. So on the daily, what I will do on the daily is, if I zoom in, looking at the chart, I know what to do. That's just it. So I have this resistance from here. This is the resistance. So this is daily time frame, remember. So I put my thing on daily, so to identify the daily time frame. Now I have this resistance. So we got a reaction from here, we rejected again from here, we are getting from here. So what I'll do is this. Since we are still trading below this resistance, this weekly zone, don't expect the market to come to this zone now until we close above this daily structure. Try to understand what I'm trying to say. Don't expect this market to come to this weekly 50% retracement until we break this daily resistance, because once we break this daily resistance, you probably see something like a break, a retest, and a continuation to the upside to test this zone. Now if I should draw my CTL, this should be my CTL. This should be my CTL on this trade. Something like this. Yes, something like this on my daily time frame. So for the market to get to this zone, you probably see like the market will not just go straight. You'll be seeing some kind of move up, push down, push up, push down, push up, push down, push up, push down, push up, and probably from here we'll start seeing a kind of change in direction, push up, then we'll drop. So for now, I won't be selling AUD USD. So I was in, like, I used this area as my CTL. This is what I use as my CTL. Yes, this zone is what I used as my CTL. So at the break, that was where I entered before the market started retracing to the upside to get another test of that 50% retracement. So if I scale down to 4 hour, so this is my 4-hour chart. And I enter my trade on the 4-hour time frame. So this is the CTL that made me jump into this trade. This CTL here. Yes. So I got into this trade about here. Yes, this is where I jumped into the trade here, and my stop loss was above. The trade is still running in my MT5 because my stop loss was above all these highs, somewhere around here. Then my first TP was here. Yes, 50% retracement. My first TP was here, and my second TP was around this zone. So that's it. But what I'm expecting now is that if I see a daily candle close, once I see a daily candle close above, like if today's daily candle close above this zone, I'll just stay out of this pair. Then if I see a correction, then a pullback to 50% zone, to 50% retracement level, I will now buy and target this 50% retracement, then fasten my seat belt. So I will monitor the trade because I'm going against the trend. So that's just it. So if you want to sell this pair now, just be careful because more correction is expected to the upside before the massive drop to the downside. So, and this situation is currently happening, like all pairs are currently having a correction, like the correction against the major trend. That's what I noticed when I was analyzing in the morning. So the next pair I will analyze is AUD JPY. So I'm kind of seeing a valid entry on that pair. So let me quickly go to my AUD JPY pair. So for now, this trade is not valid because the weekly retracement is supposed to be at this level, and I never knew before entering this. If I did proper analysis on this pair, I wouldn't have gotten into this trade because I know that the market will retrace, and once the market retraces to this level and we get a bounce and you place your stop loss above, you place your stop loss above this area, target this level and this level right down here, this trade might run for, this trade might run up to 2 to 3 weeks, because the pips will be up to, it will be around this this is 0.5900, then 0.56, it will be around up to 1200 pips move. So it will take up to 2 to 3 weeks to hit your TP1 and TP2. So that's how it goes. So let me go and analyze AUD JPY. So guys, this is my GBP JPY chart. Yes, so on the monthly time frame, the market is just like, it's just consolidating inside of these two levels, but we are in an uptrend from here since 2000. This is this should be 2020. So since March 2020, the market has been trending to the upside. Yes, so we have this downtrend and the market changed the direction on the monthly time. So checking my candlestick formation, I can see that the market just created an ICI. So if you understand my strategy, you know what an ICI is. So this is our minor level, you know, this is our minor level from the, so this is a monthly candle. Yeah, so, and remember, on the monthly time frame, if I'm to draw my Fibonacci from the monthly time frame, I'll draw my Fibonacci from this low to this high, and you can see how the market come into 50% Fibonacci before bouncing off. So everything about this market is pointing to the upside, and the monthly candles, these monthly candles, you can see that the pairs, like the price action here is still bullish. It is still bullish because of the bullish ICI we are seeing. So this simply means that we are coming from, we move like the Fibonacci. For a complete Fibonacci move, we have something like this. Let me show you something. Normally we normally have something like this. In every Fibonacci move, we have A, B, C, D. So this is the complete Fibonacci move from A to B to C to D. Complete Fibonacci move. It's as simple as that. So let me explain more on that. From here, this is our A, starting point, B, turning point, C, turning point, and D, target. From A to B to C to D. Then after this, you expect another. Okay, this is it. This is our A, B, C, D. After the D hit, when you hit 0.27 of your Fibonacci level, you use here as your A. This will be your B. Expect another C and another D. After you hit 0.27, this will be your A, B, C, D. Another one, A, B, just like that. So the is also applicable to downtrends. If the market is moving down, this is your A, B, C, and D. This is just it, from A to B to C to D. Now if you draw your Fibonacci, for instance, let me take my Fibonacci from A, and you draw a Fibonacci from A to B. You know, I draw my Fibonacci from A to B, and the market coming to 50% Fibonacci, 50 at 0.618, then now turn and hit my D. Then I will expect another B, C, and D, something like that. So in this case now, in AUD JPY on the monthly, we are seeing that kind of move, which is this move from here. This is our A, B, C. We need to see our D, and that D means the market is coming to this monthly zone. No two ways about it. You can see my monthly zone. So the market is coming to this monthly zone. We are in a bullish trend, remember. So we are expecting the market to come to this zone, but we have a minor resistance from here, which the market is respecting. So on the monthly time frame, everything is bullish for me. Everything is bullish. At least I'm expecting to hit my TP1, even if I get break even on the other trade. So let me go to my weekly time frame and see what I have. So this is my weekly time frame. This is my weekly time frame, and on the weekly time frame, yeah, on the weekly time frame, we have this impulse correction. Sorry, we have our move from here. This is our A, B. We did our C before seeing our D. It's as simple as that. Then let me put my Fibonacci. So this is my Fibonacci from A to B. From A to B. Now the market just tests the 0.5, but we didn't get deeper correction. So we didn't get deeper test of this zone. Now what I'm doing is I'll be buying this pair. Simple. I'll be buying this pair. I'll be entering this trade. So my first level target will be here. This will be my first target, my TP1. Then my TP2 will be up here. This will be my TP2. Yes. So how many pips? Let me just check the pips. This is 300, and my TP1 is, if I'm entering this trade now, my TP1 is 331 pips. Then TP2 700 pips. Whoa, this is massive. So this is remember, I don't trade on the weekly time frame, so I'll go to my daily time frame and show you how I spot my entries. So let me go to my daily time frame. So this is my daily time frame. So you can see how this market moved from here to here, then creating this correction. The market is still bullish. Now for pattern traders, this is a flag pattern. This is the flag pattern. We have the flag handle. Then we have the flag, something like this. We have the flag like this. Then after, if you spot a flag pattern, for pattern traders, we expect another move to the upside. So everything is pointing to the upside. Everything is pointing to the overall direction is to the upside. So this is my daily time frame. Now on the daily time frame, now this is where I was supposed to get into this trade. This is my CTL. This is my CTL. No entry yet. The market is just consolidating inside of this zone. And remember, AUDCHF is corrected to the upside. This one now, the overall direction is up. So I'm trading AUDJPY for now. AUDCHF, after the correction, I will sell. So everything is pointing to the upside now. So, and the reason why I'm entering this trade is not because the daily is pointing to the upside, it's because of this move. This is the reason why I will be entering this trade. We have our support. Level here. This is the daily. So we have our support level here. And the market bounced off this support level. The market bounced from here and gave us a correction. So let's take our Fibonacci and know if we have retraced to the 50% Fibonacci retracement. So let's see. This is our A to B. Now you can see how the market have come into the 50% Fibonacci retracement inside of this zone, and the market have failed to close below the 0.618. Oh, this is nice. The market have failed to close below, like everything you are seeing inside of this 0.5 and 0.618 is just the wicks of the candles, telling you that the market is just rejecting this zone. So everything is now buy. Everything is buy. So I'm just go to my 4-hour time frame. Now my my bone of contention is here. This is my bone of contention. This is my bone of contention. So what I will do is I'll just go to my 4-hour time frame and see if I have a valid entry. So this is my 4-hour time frame. This is my 4-hour time frame, and this is my bone of contention. This area here is my bone of contention. So remember, the market moved from here, this correction, another move to the upside is expected. So, and remember, I trade price action. That's just it, because it works for me. So if I should draw my CTL, you already know what my CTL is. This should be my this should be my initial CTL, because the market gave an entry here, but it's a fake out and you come for stop one. So if you obey the rules, you know that this market is this is a fake out. This is not because you need a candle to close above before you execute. So the CTL is now this one. This is now the CTL. Though this trade seems premature. This trade seems premature. So this is what I have. Remember, this is 4-hour time frame, so I'll just take this 4 hour. So this is just it. A breakout, I execute. Now my stop loss is supposed to come below okay, let me check something. If I should execute, I just need the candle to close above it. So if I should enter here, my stop loss would come below here, giving me 100 pips stop loss. This is 100 pips stop loss. Then my first target is 315 pips first target. Then my last target is 767 pips. So this will be my trade, because I'll get around 4-to-1 risk to reward ratio. But so I'm just waiting for a 4-hour candle to close above. Just waiting for a 4-hour candle to close above. So that I can enter. But I will be very happy if we reject this zone, come down again, push up again, and come down. Like, I will have a tighter stop loss. That's just it. But anything the market brings, I'm ready. So for now, AUDJPY is a valid setup for entry. So let me analyze the next pair. It should be so the next pair to analyze is GBP AUD. So let me go to GBP AUD. So this is my GBP AUD on the monthly time frame. So I'm expecting the market to come to this weekly. Weekly structure here before heading to this monthly zone. So technically, it's a bullish move from the monthly. Then on the monthly, so we had a break and retest. So I'm not expecting this market to retest to this zone, no, because of this monthly candle is a bullish. No, this is not a bullish engulfing candle. But I'm expecting this candle to close bullish. So that's what I'm expecting. Then, is there anything pointing to the other direction? No. So on my weekly time frame, I'll just go to my weekly time frame and see what I have. So this is my weekly time frame. So what I need to do is identify my previous highs and lows. So this is my previous low from here. This is my high. Then on the weekly, if I draw my Fibonacci level, let me know where I'm expecting the market to come into before I start looking for entry. So this is very simple. This is very simple to analyze. This is my low. This is my high. From low to high, take my Fibonacci from the low to high. Then this market have now retraced to 50% Fibonacci. Now last week I was about to enter this trade because of this fake out this weekly candle, this last week candle gave us a fake entry, and we stopped, and the market stopped us out somewhere around here. But the market have not retraced to the 50% retracement. That's the mistake we made. This is where we want the market to come into before giving us a valid entry. This is the weekly time frame, remember. So this is where I'm expecting the market to come into to validate this push up and correction. Validation is inside of this zone. So once the market is coming to this zone, that's when I will start looking for valid entry to buy. Now on the weekly time frame also, nothing is stopping it. Like there's nothing pointing to the other direction. Nothing is pointing to the other direction. But my target will be this. My target will be this monthly zone. So this weekly zone will be my first target. Then my second target will be this. So I will hold this trade. If I add, like maybe if I risk 1% of my account, I will close 50% of my trade around here. Allow 50% to run. I will hold 50% to this zone. Like it will take up like from here, okay, from here to here will take up to almost a month or even 2 months to get to that zone, because this is weekly time frame. Like this is almost about almost 2000 pips. So if I enter, close 50% of my position here, I will hold the remaining 50% to this zone. So I'm expecting more push to the downside before buying. So let me go to my daily time frame. So here on my daily time frame, this is where the market gave us fake entry. This is where the market gave us fake entry from here. Now this is the weekly zone we want the market to test. And remember, to validate our 50% Fibonacci retracement, we need to see the market react to that zone. So you can see how the market pushed up, come into this zone, reject it, push down, then push up again, break, consolidate around here, then push up. So this is our 50% retracement. Even if I draw it on the daily time frame, if I put my 50% retracement, if I put my Fibonacci on the daily time frame, I will still get that zone as my 50, because the goal is just identify your higher highs and higher lows. It's as simple as that. So this is my Fibonacci. This is my Fibonacci. You can see it's still the same 50% retracement. It can never change. Anytime, even if you are on monthly time frame, daily time frame, it's just identify your higher highs and higher lows, identify your lower lows and lower highs, and you are good to go. So on the daily time frame, this market will just come into this zone before I'll start looking for buying opportunity. It's as simple as ABC. So looking left, nothing is pointing to the other direction. So I just want this market to come down to this zone. Then if I'm drawing my CTL, this will be my CTL. But I have another entry strategy which has to do with psychology, which means if I just see a rejection inside of this 50% retracement level, inside of this zone, like if I see a reaction, if the market come into this zone, and give me, like, if I see some kind of price action movement inside of this zone with candlestick formations on 4-hour time frame, I will enter early, then accommodate all these move before the market break out and continue to move to the upside. So even if I go down on my 4-hour time frame, let me go to my 4-hour time frame. So this is my 4-hour time frame. You can see the CTL is also valid on the 4-hour time frame. It's also valid on the 4-hour time frame. And according to price action, if you understand price action very well, you will know that this is an impulse. 2 4-hour candles, 8 hours, the market moved from here to here, and the market have moved 3 4-hour candles, and they are not, like, you can't compare them with this move. So any bearish candle that comes out will also will move massively to the downside to come into this 50% retracement play, into this zone. So that's just it. Like for 8 hours, the market moved from here to here. Then the market have moved for how many hours now? This is 4, 8, 12. For 12 hours, the market is just moving from here to here. You can see it's just small, so we need a push it down. So this is where day traders will get in. If you are a day trader, this is just simple. If you draw your trend line on 4 hour time frame for day trading, it's as simple as ABC. You draw your trend line, you know that the market is moving to the downside. You identify your higher highs and higher lows, but day traders will see this clearly on 1 hour time frame, because the 4 hour time frame is a kind of confusing. But if I scale to the 1 hour time frame now and use my Fibonacci, you will see I will be spotting entries. Let me show you something. Let me go to my 1 hour time frame. So this is my 1 hour time frame. You can see it very clearly. This is my 1 hour time frame. Now, if I should day trade with my strategy, is simple. This is my downtrend, and for this downtrend to occur, the market gave us a double top from here. The market gave us a double top before pushing to the downside. So after the double top, this is the neckline. So we break the neckline and start pushing to the downside. So here, this is our higher high. Here, this is our higher. So this is our lower high. This is our lower low. Then, if I should put my Fibonacci, if I should check my Fibonacci from this higher high to this higher low, then I'll put my Fibonacci from here down to this area. You can see that the strategy works on all time frames. So this is just it. Now the market just tests the 50% Fibonacci level that's coming into the low. The market tests this 50% retracement level, then push downward. This is 1 hour time frame. Now if you go to 15 minutes chart, just draw your counter trend line. A break, you enter. Stop loss TP, you hit TP. Now another impulse will come. Another impulse and correction will come. Here we have this from this high to this low. We wait for 50% retracement level, which is this zone. But you got, like, you hit stop loss here. This is the stop loss, because this move, stop loss, stop hunt, then before moving to the downside. But if you are smart enough, you will draw your, you will box this move, you will box it, a breakout, you enter, you hit your TP. Simple. But I don't trade on lower time frames. So for me, on 4 hour time frame, I'm expecting this market to come down to this blue zone, before giving us entry. That's what I'm expecting. Come down to this blue zone before giving us a valid entry point to buy the pair. So let me go to the next pair, which is gold. So guys, this is gold. This is the monthly time frame on gold. But we are in a bullish trend overall. So gold have been trading since these are candlestick. These are all candlesticks on gold. So I want to see when gold started trading. Gold started in January 1930. This is January 1834. Wow. January 1834. Good now, King Gold. So we are in 2023. So this is our monthly zone. These are monthly structures. So we rejected this top. We got a test of this top from here, pushing to the downside. So my bias on gold is just bearish. That's just it. But like I told my students to stay out of gold, and this is my reason. On the monthly time frame, the market for the past 1, 2, 3, 4, for the past 4 months, gold has been inside of this range. Gold have been ranging for the past 4 months, gold have been ranging. Now, this is September's candle. So, like, for this is my weekly zone, but for gold to break this weekly zone, it will be very difficult for gold to break this weekly zone. Try to understand what I'm trying to say. For the past 4 months, we have been ranging inside of this zone for the past 4 months. So swing traders trading this pair is dangerous. You can only trade this pair only if you have high on, like, if you can monitor your trade 24 hours, like knowing what every daily candle is doing. That's like that's only when you are permitted to take this trade. But now the monthly candlestick pattern is against this trade, even if you are buying or selling, until we close below this, until we break below this support level. That's when gold is free to trade and target to this zone. But if we break above this zone, I'm out of gold until we break above here, because you can easily get the test of this zone and reject to the downside. So for gold, everything I'm expecting is bearish on gold. So let me go to my weekly time frame. So this is my weekly time frame, and on my weekly time frame, the reason why I sold gold, like the reason why I entered gold, because I'm currently holding this trade, a sell from last week Monday. Yes, I'm currently holding a sell on gold last week Monday, but I still have my personal reasons. So this is why I entered gold. I have this trend line. This is a weekly time frame, remember. So we have this triple bottom before this move to the upside occurred. We have this triple bottom from here. We have this triple bottom from this down. Let me change this color to something like pink. Yeah. So we have this triple bottom from here before this move to the upside, continued moving to the upside. But here we have this trend line guiding us in this move to the upside, until, like, this trend line have been guiding us until we hit the all-time highs of gold, which is 2066 dollars. So, and we broke below the trend line that have been guiding us, and we saw a correction. Saw a correction and a continuation to the downside. But this would have been interesting if, after seeing this impulse correction, we see another impulse to the 50% retracement level, then give us another impulse, another correction, then we target to this downside. But the market is the market failed to give us another impulse. Like if you draw a Fibonacci from this zone to this zone, we have a 50% retracement level from here. If you draw a Fibonacci from this high to this low, you have your 50% retracement level. Okay, let me put my Fibonacci so you'll understand what I'm trying to say. This is my Fibonacci from the low to the high. Sorry, from the high to the low. Now, this is our bone of contention. This is where the market come into the 50% retracement level, then reject it. Now, what we are expecting in this kind of situation is from A to B, from B to C, and from C to D. And this move is supposed to give us from C to D, but the market failed, and we created a double bottom. But overall direction for now is still the overall direction is still bullish on the monthly, but giving us short-term selling opportunity. Now the market failed here, creating a double bottom from here, but this is not a double bottom until we break above previous high. If this market moved up close above this high here, that means it's a change in direction, change of character for day traders. So since we did not close above that zone, it's still short-term bearish. Now I entered this trade about here because of this impulse correction. So my TP is here, my first TP is here, and my second TP is around this zone in my MT5. So this is what I'm expecting on this pair. Now the main reason I entered this trade on my daily time frame, let me go to my daily time frame and tell you the reason why I entered this trade. But from the weekly, this is a no trade because of this double bottom from here. This is a no trade because this is a support level which the market can easily test and rally to the upside. But I'm expecting a selling opportunity because of the COT data. They like gold is getting bearish on the COT. So let me go to my daily time frame. So guys, this is my daily time frame, guys. This is my daily time frame. So the reason why I entered this trade, the trend line I showed you on weekly time frame, this is the same trend line. Oh, sorry. So the trend line I show you on weekly time frame, this is the same trend line here. So what you see on daily, you can see it on weekly. Sorry, what you are seeing on weekly, you can see it on daily. You can also see it on 4 hour, but the higher you go, the easier for you. So this is that trend line I'm showing you on weekly time frame. So the reason why I entered this trade, the reason why I jumped into this trade is because of this trend line. This is the counter trend line. You see this trend line here. This is the reason why I entered this trade. So I love technical analysis. Before I was thinking that fundamental works better than technical. Like I was just confused. So I was just looking for fundamental facts until I realized that fundamentals work, but they will just give you the overall direction. So this pair now might be telling you, like, your fundamental might be telling you that gold is bearish, but if you don't look at it, like if you don't understand technical analysis, how do you want to enter the trade? Gold might be bearish, and here, like, you might do your fundamental analysis when gold is around this zone, and the fundamental is telling you that gold is selling, gold is selling, gold is selling, gold is selling. Now you now sold around here without checking your technical analysis and target the downside, and the market hit you out. Simple as ABC. Now this is what is currently happening in AUD CHF. Yes, remember in AUD CHF we have our weekly move. Now the correction here giving us entry from this zone, but we have our overall down test from here. So on the daily time frame, the reason why I entered this trade is because of this trend line, and we have retraced to the 50% Fibonacci retracement. Let me draw my 50%. My Fibonacci from the high to the low. The market is inside of the 50% retracement level, and we got a nice rejection on the daily time frame. Guys, analyze on higher time frames. We got this rejection from the wicks of the candles. We got this massive rejection. This is a very nice rejection, giving me that clue to execute. Now remember, the market will not always, if you are selling, don't expect the market to move straight to your TP. No, the market will give you impulses correction, giving you entry opportunities. Now on the daily time frame, this is another entry opportunity. You know what I'm talking about. This is another impulse correction, sell, impulse correction, sell, correction, sell, correction, sell, correction, sell. Simple. But entry, like identifying your entry points, is very, very difficult. So this is where I entered this trade around this zone. Yeah, the market is creating this move to the outside. So I will execute this trade again. I have my trade running already in profit. So if I draw my fib retracement level from here, whoa, this is massive. So if I draw my Fibonacci retracement level here, this simply means that on the daily, I'm expecting this market to come to the 50% zone for me to sell again. I still have my trade running, but if the market comes into this trade again, giving me another opportunity to sell, I'll still execute. Have you seen what I'm trying to say? So I'm expecting this market now, though I have my selling trade around here. My stop loss is above this zone. but I'm still expecting this market to come back into my entry points, put me in a drawdown because of this move and this correction, still give me another opportunity to enter this trade and still target to the downside. Just simple. Understand the technical analysis, understand price action, and we also have this. We also have this minor support. This is a minor support. Simple. Understand price action and you are good to go. So if this market comes into this zone again, it's giving me another opportunity to sell. Simple as ABC. This is my daily trend line. They are simple. This is not difficult. It's just for you to calm down and learn. Simple as ABC. If I decide to day trade with this strategy or scalp on 5 minutes time frame and 1 minute time frame, I'll be flipping accounts, but I can't manage my emotions. That's just it. And I cannot day trade, and I cannot manage my emotion. But this strategy works on scalping, day trading, swing trading, and the difference is just time frames. What you do on monthly, do it on daily. What you do on weekly, do it on 4 hour. What you do on daily, do it on 1 hour. What you do on 4 hour, do it on 15 minutes. It's a daily trading strategy. Simple as ABC. So the next pair we'll analyze is AUD USD. Oh, this is Dapo Willis pair, like his favorite pair. So guys, this is my AUD USD. This is my AUD USD chart. These are my monthly and weekly structures. So the market is overall downtrend. That's why you see Dapo Willis selling AUD USD every time he's selling. But the monthly time frame is a kind of confusing for now for me. Though the trend is already downtrend, but we are approaching monthly support. So even if the market will break this zone, don't assume. Trade what you see. Normally, a support is like we need to see a bounce before we move to the downside. So from monthly time frame, there's nothing against this trade. Though what Dapo Willis will be seeing now is just this bearish engulfing candle. So he will also be selling this pair, but for now I'm not selling the pair because I'm expecting a correction. So let me explain on the weekly time, because that's where I see the confusion on the weekly time frame. So let me go to my weekly time frame. So this is my weekly time frame. Now, firstly, remember the concept of price action is just higher highs and higher lows, or lower lows and lower highs. So for this downtrend, the market will be making lower low, lower high, lower low, lower high, lower low, lower high, something like that. And here on the weekly time frame, we have this lower low. First of all, the market created a double top from here. Though I bought this market from here. I bought this market from here. I was in TP, like my target was above this zone. Without, like, I was trading against the trend, the overall flow of the market. So all of a sudden, the market gets to this point and starts reversing, and I got to break even after about I was about 200 pips in profit. Now I now remember that I was trading against the trend of, like, I was trading against the overall trend. That was why I was stopped out of the trade. Now AUD USD, the overall direction remains bearish, but on the weekly guys, on the weekly we have impulse. After an impulse, you need a correction, another push to the downside. Simple. So for now, I'm not selling AUD USD. Even if Jesus Christ comes down from heaven and tell me, Obinna, this pair is selling, I will never sell for now until I see a pushback, until I see a retracement. Even if I didn't see that retracement to the 50% retracement level, at least let me just see a pullback to know that the market have already pulled back before giving me a selling opportunity. Now this is our minor resistance. This is our minor resistance. from here. These are minor resistance. So if I were to draw my Fibonacci from the weekly impulse, which is from here down to this zone, now this is where we get our 50% retracement level. This is where we get our 50% retracement level from here. So this simply means that according to Fibonacci, the Fibonacci is telling us that we need to see a push up to this zone, guys. Okay, remember AUD CHF that I analyzed previously, this same thing is happening. We also need a push up. Like if you check very well, all AUD pairs, like any pair that AUD is the base now, like AUD USD, AUD CHF, and AUD JPY, they're all giving us buying opportunities. But the reason why we need to avoid this is because AUD is like, understand currency correlation. Like these three pairs now, AUD CHF, AUD JPY, AUD USD, AUD CAD, they move in the same direction. But AUD JPY is moving again, like the overall trend is to the upside because Japanese yen is very, very weak. Japanese yen is very, very bearish. That's why that pair is moving to the downside. So in AUD CHF, AUD USD, AUD JPY, since AUD pairs are giving us corrections, every pair about AUD is giving us correction. AUD CHF is giving us a correction. We're expecting the correction before we sell. AUD USD, the same thing. If I open a AUD card now, you also see this move, this weekly impulse and correction to this. Even if you don't get to this 50%, at least give us a minor correction before we start selling. If like the truth is just the reason why I'm profitable in this market is because I'm not in a haste to execute. I always allow the market to come to me. Like I look for reasons why my trade will not work out. What I'll do now is this: if we don't get to this 50% retracement level on this weekly time frame, if we don't get to this 50% retracement level, I can't sell AUD USD inside of this zone. I can never do that. I will only wait. Like if the market reach this zone and turn back, I will just wait, fold my hands and watch the market break out, retrace, then I will now start selling. But if we get into this 50% retracement level here, that's when I will start looking for selling opportunity. Then I will now hold my trade, my first TP, my second TP. I will now hold my trade to the next monthly structure. Simple. As simple as that. So on the weekly now, I'm just expecting this market to come to this monthly zone. Even if Double Willis is selling from here, I'm not double. I do my thing the way I understand the market. Everything about this market now is just that the market needs to create a correction. Even if we are not seeing that correction, at least the market will consolidate. We start consolidating inside of this zone, So that's just so let me go to my daily time frame and see what I have on the daily time frame. So this is my daily time frame. Now remember when I told you about currency correlation. Now if you check AUD CHF, you will see the daily candles. You will see something like this, but it will not be exactly this, but something similar to this. So they move in the same direction. It's as simple as that. So on the daily time frame now, like I see some of my students selling AUD USD from here, but I did not sell this pair because of this monthly zone, because the market will always play around the monthly zone. So this market is just going to this zone, probably just get a test of the zone before moving to the downside. That's when I'll start looking at this pair. If we get into this box, then I'll start looking for selling opportunity. It's as simple as that. But for me, buying now is, but if I see a nice correction from here, I'll buy, hold to this zone. But it's a risky trade. Going against the trend is very, very risky. So this is exactly what I'm expecting. So AUD USD is not a valid trade for me for now. It's not a valid trade for me now. I repeat, it's not a valid trade for me now. So the next pair of balance is card JPY. So guys, this is my card JPY. I'll do this analysis very quick because I'm tired already. So remember, we have this Fibonacci A to B to C to D. So everything is pointing to the upside. Then on the monthly time frame, according to the candlesticks, nothing is stopping the market to moving to the upside. So my target is just here. All I'm trying to do is trying to get a valid entry. So let me just go to my weekly time frame and see. Although we have a resistance level from here, this is a resistance level. So let me just go to my weekly time frame and see. So this is my weekly time frame. So this weekly time frame, the market have been consolidating inside of this zone. Though I will see it clearly on the daily time frame, but no Fibonacci play inside of this zone. No Fibonacci play inside of this zone on card JPY. So let me just go to my daily time frame. So this is my daily time frame. Now work with COT data. For my students, work with COT data. Make sure you are trading alongside with the COT data. So this on my daily time frame now, all I can see is just a rejection, a resistance level. This is a resistance level for the daily time frame. This is a resistance level on the daily. Simple. Simple. We are done. Simple. You know what to do. Allow the market to play. Allow the market to play around. Allow the market to play inside here. Allow the market to play inside here. Once the market is done playing, you will enter. Once the market is done playing, it will give you an entry point. You enter, stop loss, first TP, second TP. It's done. So understand price action, study your charts, and make it count. Though I think my first TP will be here. Yes, first TP, second TP is here. So this is probably around how many pips? This should be around 900 pips, but the first target is around 250 pips. Yes. So this is it, guys. So bye for now.